Hello everyone, welcome to my YouTube channel. This is Manu Matthew. And today I'd like to cover what is a stocks and shares ISA. And there are many types of ISAs. There are cash ISA, stocks and shares ISA. There are many others. What an ISA is essentially, it's a wrapper that protects your money from the taxman. So every year government gives you £20,000 allowance that you can invest in any sort of ISA accounts you like. So in this case, I'm talking specifically about the stocks and shares ISA because that is where everyone should be investing in, and it has high growth margin. It's better than investing in cash ISA where you will not have a lot of growth. Typical cash ISAs in UK at the moment have much less growth compared to stocks and shares ISA. And stocks and shares ISA would be what we would essentially want to protect from the taxman because it can grow into a big sum at the end of the day. Invest £1,000 today and 20 years later it could be £10,000. And when you want to withdraw that, and if it's not within the ISA bubble, you will be charged tax on it. That's the basic introduction to what an ISA is, or individual savings account. Some of the requirements for having a stocks and shares ISA are you need to be 18 years of age and you can only invest in one stocks and shares ISA per financial year. So that would be from 6th of April to the 5th of April next year. So it would be for the current financial year, it would be from April 2020 going up to the 5th of April 2021. That would be the financial year we are running right now. In a couple of days, we are going to be running out of the allowance for the existing year. So this is a great opportunity for anyone who wants to put a little bit of money in or a big chunk of money into that stocks and shares ISA. The best advantage we have on a stocks and shares ISA is you don't have to pay any tax on any earnings from the stocks that you have invested in. So if you invested £1,000 in something and it has grown up to £10,000, £20,000 in 10 years, you won't have to pay any taxes on it. And investment in stocks are always a good long-term game, and when you're investing for the long term, there's going to be bigger financial gains. When you want to withdraw your money, you do not want to pay the taxman that cash. So it's better that you invest in a stocks and shares ISA where any earnings, any capital gains, any dividends that you make from it, you would not have to pay any tax on it. So you can essentially make a living out of your ISAs as well going forward. So if you start investing now and in 20 years time you would like to leave off the dividends or you want to leave off the capital growth, you can do that by withdrawing a small amount every year from your ISA. And in this case, if this is wrapped inside and protected in that ISA, you will not pay any taxes on it. Otherwise, if you have it saved on a normal account or a normal stocks and shares investment account, you will end up paying tax to the taxman, which could essentially be a huge chunk of your earnings. The tax bracket also differs from how much your earnings are. So if you are a basic rate taxpayer or 20% taxpayer, it would be 10%, and if you're a higher rate taxpayer, it would be even higher. The tax you pay differs on the tax bracket you are in. So if you're a basic rate taxpayer or a higher rate taxpayer, your tax is essentially different. Depends on how much you pay tax. So if you are a higher rate taxpayer, or you will be in a few years time, it could potentially affect how much tax you will pay on those investments if you do not protect your stocks and shares investment in that ISA. So it's very essential that any investments you want to make in stocks and shares ISA, first protect it within that ISA bubble and then go outside and invest if you want to invest more than £20,000 a year. And this £20,000 of allowance can be used across multiple ISAs. So you can have, let's say, split it across cash ISA and stocks and shares ISA. So you can have £10,000 invested in cash ISA and another 10,000 in stocks and shares ISA. A combination of both should equal to £20,000. It should not exceed £20,000. As with everything, there are pros and cons. So the cons of investing in stocks and shares ISA can be stocks can always go up as well as down. So there's always a potential that stocks that you invest could go down. Stocks and shares ISA have a wide variety of range that you can invest in if you want to play it safe and invest in an ETF that provides a decent return year over year, such as the FTSE 100 or S&P 500. That's also a possibility. When you are investing in stocks and shares ISA, you do not have to just invest in individual stocks or shares. There are plenty of platforms out there to invest. Some of the top ones are Vanguard, Fidelity. There are some of the very low cost or cheap alternatives such as Trading 212 or Free Trade that you can use. Sign up with any of them and make sure to make use of the ISA allowance that you have every year. Many platforms also allow you to contribute on a monthly basis, which is very helpful essentially. So you can completely forget about it, set up a direct debit that will buy into a fund or ETF or stock that you really like, and set up that direct debit, which on a monthly basis will withdraw from your bank. Let's say you want to invest £100 in FTSE 100 every month. The £100 will be withdrawn from your bank every month and invested in FTSE 100 automatically if that's how you wish to proceed. It's an excellent way to invest because investment should essentially be a habit that should be repeated in order to grow the funds. When you set up an automatic direct debit, it's a great way to invest because you are really not worrying about going and investing it yourself, or don't have to think about it as a task that you have to do. You can just set up a direct debit, let the application or your ISA provider invest that for you on a monthly basis. One of the advantages of investing in a stocks and shares ISA over other types of ISA, such as a cash ISA, would be the potential high growth opportunity. With cash ISA, the interest rate in UK is very low. It can be around 1% or lower. Whereas if you invest in a steady growth investment fund, the opportunity for growth can be very good. It's much more predictable. You can look at the history of S&P 500 or FTSE 100 funds and you can see how steady their earnings are. Funds like this provide on average 7 to 9% a year. If you are new to investing, like everything else, it's good to start it, give it a try, put your leg in the water, test it out. Start with small funds, make yourself comfortable around the platform, the idea of investing, bring it into a habit. Happy investing, everyone. Thanks for watching this video. I hope you enjoyed it. I would love to share more videos with you guys. Please share, like, subscribe. It really helps this channel grow. And I will see you guys shortly with even more videos. Thank you, everyone.